Hello, everyone, and welcome. Thank you for attending the weekly Delphian meeting. Let's put up that disclaimer so we can make these public. So what I want to go through, a couple just kind of announcements. Next Wednesday, we'll be doing our earnings webinar. It's a landing page here. Should have received an email about that, but me and Shawn will be presenting this topic. So we'll be going through all the different types of earnings plays, the how to use the tool. So a lot of things that we've been going through, and the big thing will be complete with our earnings playbook by then. So right now I've posted everything in the share drive. We look at earnings trades. So all of these are located in that share drive, and let me just put that link in the chat real quick. All right. In case any of you guys don't have it. So that's the share drive, and it's read only, so you can't share on that one or edit anything. But so in there are all the different trades for 8 different strategies, and the ones I just added. So I finished all the analysis. So I added in like the bullish runners. So these are set up the same way as everything else. So I do raw data, which is your first tab. So I go from 20 days, and I forget, I think I went down to 10 days on, let me see how far I went. I think it was down to 10 days. It's taking a while to load. It's not loading well. So you can see here's all the outputs. So and the screener I use is up here. The trade rules right here. So it's all on that first sheet. Then we go down and just whittle it down to win percentage over 80. And then from there, I'll sort by symbol and pick the best trade. So we had quite a few bullish runners, about 72, I guess, 71. So that's for you guys to go through. Did the same thing with the bearish runners. All the way down, 20 down to 10 days, and then the win percentage, and there's quite a few of these compared to what we normally see. Like the bearish pre-runners were probably the least populated. So there's a few trades in here. Now I haven't done any of these runner trades. I don't know if Shawn has or if anyone else experiment with them, but I think they're at least worth tracking. So you guys can go through and review those. I did want to ask questions because we kind of went through this, the vol rise. See if you guys had a chance to go through these and had any kind of feedback about the vol rise trades. Just seeing if anyone had comments on that.
I have kind of a general question on expirations, but not necessarily on the trade strategy. But I don't know. I guess I'll just ask it now because I'll forget if I don't. But I've noticed that when I'm looking out into the future for under certain symbols, they'll have like weeklies for like this month and this month, and but maybe they don't have a monthly or weeklies for the next month. But I'm guessing that if sooner or later they will. So it's like, and the impact here is if I'm making a trade out and I'm trying to get a long position established as a pre-runner or a runner, and there's no weekly or monthly expiration for that around earnings, is there is there some rule that maybe the guys that have traded for a while know this, that, you know, sooner or later the weeklies appear for the next month, but not until you get close enough to the next month? So it's a general question like that. Does anybody know that?
Well, I know they've rolled on when they populate things, but yeah, I mean, I don't know I don't know the specific rules on when they, you know, they populate certain expirations, you know, because they'll go like 5 weeks out or something on weeklies, and you'll have a monthly in there, and then, you know, some, you know, I think it's a lot of demand driven, but I don't know the specific answer on how they populate all the expirations and stuff.
Yeah, I was looking long term ahead to see when I could actually populate a trade to go long right before expiration. And a lot of times it's like, geez, there's not even weeklies in that month yet, because we're like, you know, more than 60 days out in a lot of times. So yeah, it's just a general question, but it kind of bothers me sometimes. It's like, sooner or later they'll be there. Why? When should I look for them? Anyway, that's just an observation I've had on looking ahead at future expiration days and when you can get long for them. So.
Hey, Dave.
Yo.
Dave, I was just looking at on TOS, and even for Apple and for Amazon, you know, they have one weekly trade in the month of October. So I'm guessing they probably don't until, like you say, you're almost 30 days out, and then they start populating all the different weeklies. So, you know, if they don't have it for Amazon and Apple, you'd figure they would if they were going to go out further. So it looks like it's probably, you got to be within 30 days, 45 days or something like that.
Okay, thanks. I just keep looking. My guess is it kind of is based upon demand and liquidity and whether there's demand for trades out there yet or not.
Well, I would
like Apple, like you said, Apple's very liquid, so, you know, you're going to find them quicker on those bigger.
And Amazon doesn't have it either. So you get one weekly trade in the month of October for both Amazon and Apple, same week. So it sounds to me like once you get within 60 days, that's when they start populating more of them going forward.
Yeah, I'll start looking at 60. Thanks for the observation. Appreciate it.
Okay, any comments just about the vol rise? Like we were talking about that, you know, the past couple weeks. All right.
Kind of hard to do these until we really know what the, not that I would do vol rise, but I would do some of the others until we get a firm date on the earnings dates.
Yeah, we'll, you know, it all depends obviously on the earnings dates, but I don't, you know, I'm going to do a few of these live trades. I don't know. Shawn did 1 or 2 last quarter. It's kind of at the end, but I'm going to do some of these live just to, you know, see how they go. You know, it's just like pre-runners. We kind of found the strategy. Then we, you know, I think the first one we did was a line, and that thing like killed it. And from there, we're kind of, you know, okay, these work. So, you know,
Yeah.
we'll be trying them more so next quarter.
Next quarter, yeah.
Yeah, but I mean, I would at least say track it. I mean, it seems like a really good, really good risk to reward as far as these trades. So.
One comment back to that comment was that if you have more than 1 year on your chart, like if you have a 13-month daily chart instead of a 1-year daily chart, you'll always go back to see the you know, full, you know, we'll see 5 earnings dates. So you can go back 1 year and get pretty close to projecting out to the next year. I think you're usually all within about a week when I've looked at this, maybe. And if it's a Thursday, you know, it'll be a Thursday usually on the same time of year from the last one. So it's easier if you can look back and see that the quarter that's coming up a year ago's date, and you'll be pretty close, I think.
Hey, Russ, Dave, rather, are you talking about setting up a toss, one of your toss date times as with the 13-month?
Yeah, just anywhere where you can see, you know, the earnings dates from
Yeah. From
when
a
you
year.
get, when you have a 1-year chart, you're missing that.
Yeah,
You're missing
yeah.
that last one. So that's why I just add one more month, and you'll see
Okay.
them all the time. That's
Okay,
a way.
never tried that. I'll look at that. That's interesting. Okay.
Yeah.
Thanks.
And then just this is Shawn. And real quick, just if you go to like the options exchange, I think what is it, the OCO Options Clearinghouse Exchange OCC website, they talk about your weekly options. You're going to have the next 5 weeks worth of weekly options that are going to be available for your weeklies. So if this week would be a weekly option, next week is going to be a monthly, so you skip that. Then the next week would be another weekly, so that's 2. So then you would go 3 more out, and that's typically as many weeklies as you're going to have available.
Okay.
Yeah, thanks.
Yep. I'll send that. I'll try to put that in the chat or send that to Josh, just that link.
Okay. Okay, so I guess that's enough about that. So you guys have all these. You can, yeah, Shawn put it in there. So you can go in and download these, save them, create stock lists from them, however you want. So the next step with this, or I guess the final step, is I showed you guys this last quarter. So this is what I'll be building and sharing to everyone. So I've done the first 2 here, and then we'll have all these populated. So they each have their own individual stock lists, and you'll be able to sort by earnings dates, and this will give you the like for this bullish pre-runner. So Philip Morris, if we click on this here, it gives us the basic parameters. We want to get in 20 days before. There's our price target. So based off of the current Delphian earnings date, this would be an entry next week, the 17th, if you want to do this one. So, like we've said before, you got to, the tracking these is, can be difficult, especially if you're doing, multiples like, pre-runners, you're doing vol rise, non-mover, vol crush. So, so there's a lot of moving parts. Right now, this sort on entry date is broken, so we're gonna get that fixed. But you'll be able to click on here and just have, okay, here's all the entry dates. So what before you enter that trade, on the 17th, you just want to verify, manually that the earnings is actually going to be the 15th, and they didn't move it because last quarter and even a quarter before that, they were moving these dates all around. So typically that's not an issue that we've seen, but just with this whole COVID crisis, it's become an issue, the last few quarters. So this will be completed by next week, and I'll share it to you on the system. So this will be nice and easy after this, and we'll get that sorting fixed also. So, so that's what to look for next week. We'll cover all that in that webinar. And speaking of that, yeah, we already talked about that webinar. So the other thing I want to go through real quick was feedback tracker. So, and I'll send a link here too. So this is where you guys can put in anything that you see in the system that you think could use improvement, or errors that you've found, or things like that. So Sudhir, we are really close to finishing up that horizontal testing, so you can do multiple things at the same time. So we're at the 10-yard line on that. So that hopefully we'll have
Oh, that'd be great.
Yeah.
One thing I did want to mention is I was going through the transitions today,
Mhm.
and the bulk button on long call, long put, whatever, on the state transitions tab is it won't work. It says oops, something went wrong. So
Okay. Yeah, I had a few of those and they resolved it. So I don't know. He's probably working with the code for that to implement that horizontal testing for that button.
okay.
So we can check with them to make sure that's working properly. But we should be, Shawn and I should be probably testing that new capability at the end of this week here, and hopefully next week we'll have it up and running. But depending on
Okay.
how fast they do it. Gail, there's that PDF is like a real issue. And Ashok hasn't decided on whether you guys can have Excel exports or not. So that's kind of up in the air right now. But the PDF's like a real issue.
Okay. I'll wait. I'm sure, it'll come out when it does. So.
And then we just Pushbo, we just told them about this one. So they're the programmers are looking into how we can make that easier. So basically, in your virtual portfolios, the top columns disappear if you have a lot of entries in there. So we're working, they're going to work and figure out how we can keep all that. So it's a lot easier to navigate and, just usability. So they'll be working on that. SPX options, those weeklies, that's a programming issue. They come in different than everything else for some reason. So that's a coding issue that Ashok and the programmers have to take care of. So they're working on that. Hopefully it'll be done this week. But so if you guys have anything, just feel free, add a line and explain it here. If I don't understand it, then I'll reach out to you and to get clarification on it. So we appreciate all the feedback you guys have provided. Obviously, a lot of great things. So keep them coming, and we can keep improving this for usability for you guys, us, and everyone. So okay, so that was just kind of the general. Any questions on that? All right, so we'll just go through quick market. So, last week we were in the 40s, 44, somewhere around there. So it's obviously dropped since then. Still, hasn't, typically it'll come down, in the 20s. So what I would look for, looking at SPY, typically when we see these in the past where they run way above that target 3, they'll come back down to target 3 at a minimum. It's not a guarantee, but I would say, a high probability that it'll at least come down and touch that, 317. So that's the only thing you can really look for on this. The Russell obviously gives us a lot more information. So, if you guys paid attention last week, I said if it closed below that entry price, then which was providing strong support, and then watch out. So as soon as it did, it dropped way back down here. So right now, basically we're going to watch that stop loss area and see if it can break above that entry price. So here's your two, your resistance and your support that you can watch near term. So this is the only indice that's really giving us any indications. So I would watch this one closely. If it breaks below those stop losses, then, you know, I would say the SPX is going to hit that target 3 on the way, you know, that state 1 target 3. I'd say that's a foregone conclusion if it can break through that, you know, stop loss here on Russell. So, so that's what I would look for as far as the market direction.
Can I ask a question to the group?
Always.
Okay, you can ignore my questions or whatever. But curiously, I mean, we just went through a 10% correction on the NASDAQ in like 3 or 4 days,
Yeah.
not more than 4 days. So that was after our last meeting. And by the way, Ashok's warning was just timely as all heck from at the end of last meeting. So I don't know if he's listening or not, but you know, thanks for that. But my question to the group is, what do you think, what is any thought processes on why the correction that was that many days, whether we're like you were just talking about, could we still go lower? Yes, but that all depends on why there was the correction, and is the reason still persisting or not? That's kind of my question to the group. Do you think there's a reason that still persists to the correction that we just saw? So out of the box thinking is what I'm kind of looking for.
Dave?
Yo.
It's Mark. So my take on a lot of this stuff is, you know, everyone wants a reason, and there's not always a reason. It's just markets move. Markets sometimes move. To me, I saw in the commodity area, they'd have these 3-day moves, and that's kind of what happened here. It seems, and I was going to ask Josh about that, if there's a way that they could look at it. We would see 3-day moves a lot, like where stuff would kind of fall apart. And I mean, we'd have a 10 or 15% move in our space, and then it would just stop and just go back up after 3 days. For some reason, it's really very strange. But markets just move sometimes. There's not always a reason, to me, anyway. You know. Anyway, that's my take.
Yeah. Anybody else? I've listened to a lot of. I've been trying to find out what other people are saying about what I was just asking, you know, on the various media outlets, and from one point of view that I've seen that's was fairly prevalent was that there's just no excuse for the, you know, melt up for no reason on a lot of the mega caps. So, you know, they were just maybe simply just overvalued. We had the jobs report that came out Friday that was okay, but it was then I think Jay Powell came out and said, yeah, but we're really concerned because employment's picking up, but not nearly like as fast as we kind of hoped. So interest rates are going to stay lower longer. And that was, again, you know, before this, you know, I think that was on Friday. So, you know, that news is now out there. So maybe it's been absorbed. That's kind of I'm trying to figure out where we're going to go next, whether it's going to be a bounce opportunity or whether we should really look at that level that Josh is just showing us and, you know, target that as further down to go. So, you know, that's what I picked up, is that hey, things have just gone up too far, too long for no reason, and there needed to be a pullback on a lot of these huge tech stocks, and they're the ones that pull back the most. The mega caps on the NASDAQ, which is Apple, you know, those ones stuff.
Yeah, Dave, I agree. Sorry. Go ahead, Jean.
Oh, okay. I was just going to say a couple of things I've been reading, and you're right. First thing was everything was going up and nobody had a good reason for all of the rally that we were having, as big as it was. But another thing, you know, Tesla didn't make the Dow, and a lot of people were thinking it would. So that caused it to kind of crash a bit. And would that, this is a question, would that pull down some of the other tech stocks? I don't know. AstraZeneca also, their trials had to be stopped because of someone getting sick and having to regroup all of that. I think there's several things that cause this, if you know what I mean. Not just, I mean, and it all kind of came together at this time. Now, whether it bounces back or not, I don't know, after we all absorb those things. And there's probably some more that fit in there too. you know.
Yeah. I think it was a lot of profit taking. I think things were going really pretty overheated.
Yeah, yeah.
A lot of technology stocks. So I think it was just a matter of profit taking, and it brought, and like you said, Tesla not being able to get in the S&P is the S&P, but not being able to get in the being rejected or whatever, for whatever reason why they're rejected, I don't know. But I think that probably could have brought a lot of technology down with them, and it was just snowballed from there. But
This is Joanne. Did everybody read the article about SoftBank and the
About
$4
what?
billion invested into our market on tech stocks?
No, what was that?
Okay, I'll send it. I'll send the link to an article on
Yeah.
SoftBank, and then
Okay.
how they sold calls, and they were kind of hedging the account. It's a $4 billion deal. I'll send the article.
Okay.
Yeah,
Thank you.
I don't know about that either.
No, I couldn't see when it fell. I just looked at all the news sources that, the typical ones anyway. I didn't see any reason for it either, other than I just said, okay, they're taking profits because it was so high.
Yeah,
And
well,
you can
today's
I've got I put a regression channel on the NASDAQ on TOS, and it was hitting the upper standard deviation on the top. Yeah, NASDAQ was hitting the upper, one standard deviation on a regression channel, which is, it's never done that before. So it was like, oh, getting overheated.
Yeah, well, I think the market definitely was overheated. Everyone can agree with that. And I think we all also understand the reason, this melt up happened was because of stimulus by, Fed lowered rates, said they're going to keep them low for God knows how long. They're pumping money in. One thing that I think has become apparent is that, this stimulus next round, which was pretty much taken, everyone was thinking that was going through. Obviously there's issues with getting that through. So, I mean, that could possibly have caused things like, okay, we don't think it's going to go through, they're turning the pipes off. So, like Sudhir said last week, I mean, you have to always always know what the Fed's position is, with rates and with, the money situation, whether they're increasing or decreasing, if they're raising rates or lowering rates. So, obviously they're going to keep the rates low, so that's bullish, or even possibly drop them. And the money is the thing right now. So the other thing I heard, which was interesting, I haven't heard too much more about it, is that they're going to, I guess there was an announcement, but I haven't heard much about it, was that they're going to change how they're going to calculate inflation, which is always kind of like, really? So I would try and look for stuff on that. I mean, that I think, if they're going to try and change how they calculate inflation, then they're going to, obviously they're going to try and hide stuff, and how they calculate things, like food prices are going up, things like that. And, it's just kind of strange that they would announce something like that. And I just haven't heard much press on it, but I heard about it, but I haven't heard anything, media-wise too much about it though. So,
Hey, Josh?
Yeah.
Yeah, this is Winslow. I suppose I should add this to the spreadsheet. I just looked at Apple Computer here, and the Delphian has not adjusted for the stock split. Yeah. How does that happen?
Right now it's a manual process. On the new servers, it's automatic.
Okay.
Yeah, so it's
Well, I don't mind.
so it's like it's a manual process right now. So they have to do it individually, and I'll see what they say.
Okay. All right.
But we'll add that to the feedback. But yeah, so anything you put in that feedback, we go through that pretty much almost every morning. So if you
Yeah,
want,
I'll
you want
put it
things,
in there.
you want things moving, just put it in there. So,
Yeah, I'll do it.
but those were my thoughts on, kind of why things um, turned over, and why it turned at a certain point. I don't, I mean, it was so oversold. I mean, so overbought. It's just kind of crazy. But you never know when that, the top's going to be. Yeah, Ashok did a pretty good job last week of telling us. I think that was the top. So, okay, so that was just kind of the quick market analysis. Any other comments or questions on that?
Yeah, I have a comment along that lines. I am hearing from commentators on CN. There's a number of people who say they're going to cash in treasuries till after the election. So that may also be part of the sell-off because there's some prevailing consensus that regardless of who wins, it'll be contested, which it seems highly likely.
Yeah, they're setting up for that, obviously.
Yeah. So I heard Roger McNamee, who's a regular commentator on CNBC, and I forgot one other person who has said they're cashing out and just waiting until after the election, which I'm kind of doing the same thing. So I'm just going to minimize the trading till after the election to see what happens. So that may be why it's selling off. It's stable today, but that could be another. It was already really high, as you mentioned, but that may be another reason for the sell-off.
Yeah, and September's not one of the best bullish months out there.
Yeah.
So, yeah, I mean, it's going to be tumultuous. There's going to, this is going to be a bare knuckle brawl as far as the election. So, I completely agree with that, and it seems like they're trying to, they're already saying like, oh, we're not going to be able to count the votes until, certain states and things like that. So, some states it's not going to matter because it's just a matter of the electoral college. But, if there's enough states that are not able to count them, then it could be a delayed result. So, because you only need, you need 270 for the electoral college. So if enough states have them counted properly, then, that it won't be an issue. But there's already states out there saying like, there's no way we're going to be able to, it's going to take a week, or we're going to accept ballots 17 days later or something crazy like that. So, yeah, so it's definitely going to be an interesting, couple months here as far as politics. So.
Yeah, in my own case, I've been looking over the Excel files that you guys sent. There's really not anything to do with them right now because they're Q3 Excel files, and the earliest trade you can make is 20 days prior to earnings. So even if earnings are October 15th for Q3, or usually they start about the second week, there's no trade to be made until mid-September, right? And but even in my case, because of the election, if I was going to, let's say on one of the volatility rises, try a trade for 2 or 3 contracts, I'll probably back down to 1 contract. You know what I'm saying? I'm limiting my exposure and reducing the size of my trades. And we're only talking 3-4 months. So 3-4 months to be minimizing your exposure in the market over a lifetime of trading isn't, really that much, right?
No.
So.
No, I mean, there's obviously nothing wrong with scaling back risk on trades and things like that. If you feel that, it's going to be kind of an uncertain environment for the next few months. So.
Yeah. Anyway, you asked for comments. That's where I'm thinking.
It's a good comment. So, anyone else? Before we have Shawn get rolling here. All right, Shawn, you here? Internet
I'm here.
working?
Yep, everything's good. Everything's good inside.
You're not in your backyard
Nope, nope, inside today, so it's all good.
sipping margaritas in your backyard? No.
That would be nice, right?
Feeding.
Nice.
Yeah.
Too hot here in Florida, as everybody knows.
Yeah, it's brutal.
So yeah, no worries. Yep. So I got this, and so yeah, my plan was to just go over a couple of different things. I'm going to share my screen, and let's see. So yeah, I just wanted to go over a couple of the major things we've kind of been going over recently. I just wanted to talk about the screener, the studies, state transition, seasonalities, and some of the other things that we've been working on. So I want to make sure everybody's been using those different tools. Like Josh had mentioned, the webinar is next Wednesday, so we're going to be going over a lot of the earnings stuff next week, but I'm going to try to put some documents together to have some things to send out to show or explain some of those earnings tabs a little bit better, or a little more concise than we currently have on there, so everybody can kind of see those and how some of those earnings plans are constructed. Does anybody have any questions regarding the screener or any of that tool? Has anybody been using that tool? Have any feedback based on that tool that they could offer? All right, so no worries. Go ahead. Somebody gonna say
Yeah, I
something?
was just going to say, if you're talking about the transition screener with the back testing, yeah, I've been doing it. That's why I put that one request out there in the request, database to be able to output the symbols anyway that consistently do well when they hit that, state one, target 3, things like that. So that you
Right.
can, because you end up with a couple hundred, and a lot of those are not very do not hit it consistently, but a few of them do. So that's why I will go and manually go through the whole thing, and just pull out those. And I thought that would be interesting to go on ahead and play just those anyway. So
Just
that,
those ahead of time, yeah. Yeah, and you should be able to add some of them to like your daily watch or your daily alert. But I do that same thing where I come in here, and I go into the state transitions on a daily basis, like we mentioned, a couple weeks back, and I'll run either just the analysis tool individually on the state one, or I'll run it as a bulk now on the state one as well, and kind of do that on a daily basis to see if I see any that kind of match that particular criteria. So.
well, one of the things that I was looking to do was to just create a list of just the ones that consistently do it, then run the back test, because I guess once you do the back test, then you can set up the alerts. And I thought, okay,
Gotcha.
that would be cool to be able to just use those that are consistent and then set up alerts for them every time they go into that.
Those particular ones, yeah.
Not just those particular ones, instead of that whole database of them. So.
Right. Yeah, I could try to figure a way out that might kind of speed up that process for you. I have to think about it a little bit and then try to do it myself to see if it would come up with the right information. Like I mentioned before, I kind of have a good idea of what to do in the platform and how to get things done. But sometimes if I'm not 100% sure, I try to run the test myself and just see what the data looks like, and is it kind of showing what I thought it would show, and if not, then maybe I need to kind of adjust some of my parameters or ask Josh, but yeah, I could see if there's a way that maybe we could pull out some of that information and get it faster to you,
Okay. Well, if not, I mean, I can go through the list too. If Ashok doesn't want to give us a output to a spreadsheet, and I can go through the list myself and just sort them by, the symbol, and if they're consistently do it, just manually create that list anyway. So
create it that way. Yeah. Okay. Yeah. So we can work together on that too and see. But yeah, I mean, and as far as the screener really too, so this is the state transitions, and I can kind of go over this page. I know we talked about it last week a little bit, but what I mentioned before is this is pretty much what I do every day. I come into the studies, I come into the state transitions, which is the page here, and I try to see, are there any positions that look good to put a trade on, whether it be a long call or a bull put spread, or maybe even some long puts, depending on what state we're looking at. So, this is definitely an area that you should get familiar with and just try to use on a daily basis if you can, just to look at it. I automatically have it come up where it comes up to an all symbol list for me and to the long stock position. Obviously, you can go into your general settings and you can make adjustments to these areas. So, you know, if you want the liquid options list to come up automatically, it'll do so, or if you want it to come up with a different strategy right off the bat, you can do that as well. Typically, I'll just look at a long stock, and I know that, you know, if a stock like this TCS shows, you know, mediocre results on a long stock position, then it's highly likely it's probably going to show fairly mediocre results on, you know, a long call position and possibly even a bull put position. So if something shows basic a win percent of 40% on a long stock, then I might even just bypass it and not even look at it on other strategies. You know, but if I do look at something like this NOC, you know, and I click on the T3 there, you know, now I'm going to get into a little bit of a better win percentage, and we're talking about a win percent of 70% on a long stock, you know, with a 1.7 profit factor. And you can see there's 47 trades. So 47 times has Northrop Grumman went into our state one within the system over the past, you know, 13 years. So this is one that I would want to look at further using a different strategy. So, you know, I could click on my long call strategy, 25% profit, 100% stop loss with a delta of 30. And if I hit analyze, then it's going to pull up those results for me. And once that populates, we can look at the results and how they show. So we can see now, based on that option, you know, we're looking at a win percentage of almost 81%. The profit factor is a little bit lower, 1.38, but we can see obviously my total profit is going to be about $1,300. So, you know, it shows me some results pretty quickly. So this is something, like I mentioned, I use every day. This is one of the ones, this is an actual trade that I actually put on today as well. So I put on a trade for the NOC. I basically used these exact parameters here. I tried to go out 90 days to expiration, and I tried to find an option that was around that 30 delta to purchase that. So, you know, I went ahead, purchased that option this morning, and put in my GTC to get out at 25% profit as well. I think we mentioned it before, you know, we can obviously always, if it's an 80% winner here, you know, we can go up to 50% profit target, hit analyze, and kind of see how those results show as well. So we can say, hey, well, maybe we want to be a little more aggressive with our profit on this particular stock, and we can see the win percentage drop down a little bit. So 81% to now 64%. But, you know, my profit factor didn't drop down too much, right? I think it was maybe 1.7. Now we're at 1.35. So it did drop down a little bit more. So that's something that I do. I think, you know, if you look at this, I believe Josh and myself, we have access to this matrix, and that's the one that he was talking about was it here regarding you'll be able to actually go in there and test, you know, multiple strategies at the same time. So we're, you know, I'm going in there right now and just testing the look and feel of it and the results of it to make sure it works properly. But basically what you'll be able to do is you'll be able to click on this matrix and you'll be able to test multiple strategies at the same time, and then your results will come up here and show up in the bulk analysis. So you'll be able to run that massive bulk test on different strategies and then go in the platform and do other things, and then your results will show up on this bulk analysis here. So it'll be interesting once this kind of comes out. So I don't think everybody has access to that as yet because I'm still testing it. So
no, it's just me and you, dude.
Okay. So that's why you see that matrix there. So it'll probably have a different name possibly, but that's just for Josh and I to test it. So that's what we'll be doing. So,
Shawn,
yes.
Just FYI, I go do the same thing you do. You were asking earlier, but I was on mute. I go through every state transition, that screen, every state transition, and I'm kind of selective. I'm biased toward bull put spreads. That's my favorite trade. I'll look for long calls and long stock, but generally bull put spreads until the recent sell-off. And I find a lot of bull put spreads that have been successful for me that didn't show up in the Delphian nightly alert. I mean, there may just be an odd state like, you know, it went into state 6 and the bull put spread was showing 90% success rate. So I took it and they work out.
Right.
And yeah, this is what I was saying earlier isn't working today as I tried to go through it, the bulk button.
Oh, the bulk didn't. Okay.
But that because I
Hey,
do this
Sudhir,
every single day. Go ahead.
yeah, it's working now. I think we had an issue with the state modeling being populated this morning, so that might have been the issue. But I just tested it. It's working now. So
Okay. Yeah. Then this is why I requested the matrix, because I was going through it every day, and at first I would do all of the 16 choices, and to go state by state was just taking forever. So you know, the matrix would be really nice, because you know, some days you may not realize a bear call spread is the right way to go on that transition, right? If you don't select that that choice, right?
That strategy, right?
Yeah. Oh, and one just side note, if you want to, for the matrix button, maybe you have a picture of Keanu Reeves with in the matrix outfit.
yeah,
That's right. Yeah,
and
has some glasses on.
the black
Yeah.
leather.
The long black
Sunglasses.
leather coat, the glasses, and all. You could do that.
Yeah.
Right. Yeah, I saw that today or yesterday. I was like, all right, the Matrix, interesting name, but we'll go with it for now. So there's little things like that that we got to try to work with them on after we test it and things like that. But yeah, it can be a little cumbersome. I think like Sudhir, like you mentioned, you get into the groove obviously of the way you do it, and I think that's perfect. Whether you go state 1, state 2, and so on, or if you do all bullish states and then bearish states, however. But I think as long as you have a progression of how you're doing everything, that's the key, right? Because you don't want to miss that bull call spread or that bear call spread or that bull put spread, miss that trade that possibly would work very well, on Microsoft, and it might not work on the other. So being able to analyze those various strategies, I think on all the different states is pretty crucial, and having the progression of your profit percentage, and going up to see if you can take more profit, or, adjusting your stop loss percentage to see if you can kind of reduce some of your losses, so, and that's what I found. And that's what I find that helps. If I do it in a progression, I don't really forget a step, but if I start getting kind of sporadic, that's where I might, miss that bull put trade. That would have probably been the better trade to do on that particular symbol.
Hey, Josh, Shawn.
Yes.
If you go into option screener, I have a question that I had previously that I finally found where that widget is, if you could explain it.
Okay, let's go in there and look real quick. So let's see the option screener.
Since we're talking about bull calls, if you click on the bull calls.
The bull call, I think I remember seeing that now after you had mentioned that.
Yeah, and then you go into the icon backtest for a particular stock. It has the widgets.
So when you go into backtest, so if we want to do a backtest for Adobe, that's where it's going to ask you the widget.
Yeah, so that's just all the different types of wizards that we have. So like on that wizard page, you have like custom signal, earnings, monthly, weekly. So it's basically gonna, it's the same output as, going into that wizard. You see them there? Like how you want to do the back test.
So it's asking you how do you want to, when you're going to go in there under any of these, under the bull call spread, and you want to perform a back test, what's going to be your entry, or what's your entry signal to be able to get in? How are you going to perform that particular back test? So typically we'd use a signal, something to that effect. But here you could obviously do a signal. You could use the monthly type trade if you wanted to do monthly options, or state modeling if you wanted to do that. So really what you're doing is, and Josh can correct me if I'm wrong on this or thinking something different. This is really just the options screener to find options based on this particular criteria here. But once you find a symbol that possibly works for this criteria, then you could say, okay, well, now that this criteria matches, I want to do a back test. Okay, well, just like any back test you're going to do, what's going to be the reason you're going to enter this particular stock? Is it going to be based on a signal? Maybe it dropped below, the Bollinger Band, or maybe it went down to 1 standard deviation. Is that you're going to be entry signal? And so on and so forth. So you'd have to create a back test just like you would using that particular wizard.
Okay. But this screener seems to, refine as far as your potential profit and your risk much better than just the other ones where it might not be as profitable.
Yeah, I would think, I mean, I've kind of used this in reverse, I think, from coming in here and finding a list and then going to the back test. What I've done is I've actually gone into, and I've done this with Pushpa as well, was I'll go into, some type of screener and then find stocks that might match, the fundamental grade analysis, or they might match something based on state modeling. And then once I get that list of stocks, let's say it's a list of 10 stocks, then I'll come in here and pull them in this stock list and see if any of those 10 stocks meet this criteria for the option screener. And then if it does, then I've already kind of done, I haven't done my back test, but I basically found stocks that have matched my particular entry signal. And then I've made sure that I come in here and then they match based on, the expiration and the portfolio risk and things like this, which is just what this is showing you. I mean, this is really an option screener based on the portfolio risk, position risk, and your deltas and things like that. So, it's just pulling in symbols that are going to match that screener. And then if you wanted to back test it based on it meeting some other signal criteria, you would have to actually go in there and say, okay, well, let me do it based on based on the signal. Does that make sense?
Yes.
Because yeah, it's really just pulling out options based on, all these different values here, and nothing else really. It's just saying, hey, based on, the risk you want to take on and the potential profit you want to make and things like that, here's a list of symbols. But really, all of these symbols, not all of these symbols, excuse me, but I mean, some of these symbols obviously could be in a bearish state or could be in a bullish state. Doesn't necessarily mean that they're all bullish based on state modeling right now. Some of these could be bearish. So maybe you want to take out, all the symbols in this list that are just bullish. And if you wanted to do that, you would have to find, which ones are in state 1 or any of the odd states that now, and you might be able to get this list down from 17 to maybe 6. And then you could say, okay, well, let me try to refine that list a little bit more. So I think that's something that might help as well.
And Shawn, you can do that by creating a stock list out of this and then going into the custom screener and, adding in whatever criteria that you want,
Right. So we could try to do that. I haven't done that using this, but we go to add to stock list. I could go add to stock list. So I could create a new stock list. So let's just say something like 090. Say again?
No,
What's that?
That's the same bull put 99.
Oh, this is a bull call, I think, but yeah, right.
Yeah,
Bull call. Let's see. I think it's bull call option screener. Let's see. If I hit save, all right. So then now I can take that stock list that we just created. I can come into the screener. And this is what I was talking about earlier too, that I wanted to make sure everybody was using not only the studies that we have here, and I'll go through these studies in a second, but our custom screener and our predefined screener. These are some really, valuable tools where you can go into Delphian and find, stocks or options that meet just a variety of criteria and work with a stock list based on that to maybe give you some good ideas of different things to back test and potentially different things to trade. So if I click on stock list and I use the one that we just created, so user defined, it's going to come up right here, 99 bull call option screener. If I click on that, and then let's go down to state modeling, and let me just pull up state model, and I just want to look at all current bullish, let's say, because we're doing a bull call spread. If I click outside of it, my criteria shows up right here. If I hit find stocks, so my list went from 17 to 3, 6, 9, 12, right? So now I have, is that 12? 3, 6, 9, 12. So now I have 12 out of 17. So I'm able to take away 5. So the other 5 might not have been in a bullish state. I see a couple here, this Drexon, bull shares, NASDAQ 100. Let me say I want to just go into stock filters and do asset. And now I might only want to use equities. So if I click out there, so now my asset type is equity. If I hit find stocks, now I've taken out a couple of those different symbols. I've taken out the NASDAQ and that that directs them 3 times. So I'm able to kind of just refine this list a little bit more. And now what I could do is, maybe some of these are a little too high priced, maybe Chipotle, Priceline. Maybe I want to take out some of those higher price stocks. I could also do that again by coming in and saying price. I only want my price to be between, let's just say $30 to maybe 500, non-adjusted. If I click outside of that, current price between 30 to 500, hit find stocks again. Now I have a list of 4 stocks. So then what I could do is I could obviously come in here again. I could hit add to stock list, and I could either create a new stock list or I could override. So let me say I just want to override, and I want to override the stock list that I just created from those bull calls. I would just click on that, hit save, and now my stock list should be only these 4 stocks. So now what I can do is I can go back into my options screener. And we were looking at the bull call once it pulls up. So if I click on bull call and that loads, and I'm under stock list right now. So if I click on this, my new stock list I just created, so those 4 show up in this list. Now, probably the same information is going to show up that was there before, the same type of stock or bull call spread to buy, same amount of risk, things like that. If I want to change any of that, I have to change the screener here. But we can see, I only wanted to do stocks at a certain price range, that were in a bullish state within state modeling. And now I got this list of 4 stocks that I might want to look at to potentially put into my account, just based on the screener. Now, if I wanted to back test it, further saying, how well did it perform when it did go into state 1 or think a different signal like that, I could obviously do that back testing and change that widget and go from there. So, that's a way just to kind of take a list that maybe Delphian has for you based on a certain criteria or certain screener, and just go in there, save it to a stock list and refine it, and to make it kind of, try to match maybe what more of your investment profile might be versus mine or somebody else's. So it's a very useful tool, both this screener and the option screener, or just the normal stock screener here. I think that's a very useful tool. Even you can come in here and go custom screener, and we can kind of revamp what we just did. So, Ashok had talked a couple of weeks ago about that grade fundamental, or the grade analysis, fundamental grade analysis that we have in the system. If I click on the stock list that we just created, and I wanted to look at some that were, within that, sorry, what was I looking at? Within the fundamental grade analysis, I could say, well, out of those, we know there's only 4 stocks now in that stock list, but I could say current growth A, and maybe it's got to be above, let's just say 10. If I hit find stocks out of that group, Adobe is the only one that shows up as a grade A above 10, and my score on grade A is actually 84. So I was able to take a list of maybe 17 positions or 17 symbols and drop it down to 1 Adobe. And now maybe I want to go in there and test Adobe and see how well does Adobe do when it's in state 1. And then I can run that analysis on my back test, and that'll kind of give me an idea if maybe I do want to use that based on that, bull call screener or option screener, or maybe I want to use it, some other route. Does that seem fair? Does everybody understand how I did that? And that just takes some playing around with it. That just takes playing around with this custom option screener here, adding that to a stock list and using that stock list in the system, and then just trying to refine it and kind of circling back, maybe adding more stocks to the list or taking some stocks out based on some other screener, and just using that list to your advantage. So. Yeah, so this one's a good thing to use, the custom screener here. Please, I want everybody to use this and mess around with, all these indicators. Certainly the state modeling, use that. The fundamental, the Delphian grade, I think is a really good one that you can start using as well. Yes.
Sure, it's cheap. So when you've created this stock list, every day you would go in and run the same parameters again, because otherwise it's not going to update, right? Things don't add and drop off. You have to go
right.
and do it every day.
Yeah, if you want to refine the stock, or if you want to come up with the stock list for the new day, then yeah, you would want to run it again, especially if you're using things that could change on a daily basis. So obviously, like your state modeling can change on a daily basis, meaning a stock can go from state 1 to state 2, overnight, and then back to state 1 the next day. So if that happens, it might pick up that stock today. It wouldn't pick it up tomorrow, and then it would pick it up the next day if it went from 1 to 2 to 1. So yeah, you would want to make sure you're doing that. Now you can't, go ahead.
Okay, so let's just say we like Adobe. So your next thing is to back test it, right?
Right.
So would you do that, please?
Yeah, sure. So I haven't done it using the option screen. I don't know if Josh has, but we can definitely do it.
Don't you go right there where that quick link is?
Yeah, you could do it here where you back test it here. So we could back test it here. But I was looking at that widget too on that option screener, but you could back test it there. So now we're going to back test it, and once we click back test, since we were in this screener, since we're in this custom screener and we're using current grade A as our initial screener to pull out Adobe, when we click on that quick link back test, the signal that it's automatically using is the current grade A growth signal. So that's going to be the signal. So anytime Adobe goes into its current grade A in the fundamental, it's at least a score of 10, then it's going to look into the system and actually purchase Adobe based on the other criteria that we put in the system as well. Does that make sense?
Okay, so it would automatically buy it? Is that
well, right. It would automatically say, hey, you're going to enter Adobe now because it just went into a current grade A under the growth fundamental category, and it has at least a score of 10. So that's what this initial signal right here is saying.
Okay.
So when you do that quick link, based on this, that's going to be your first entry signal. Now we can add things to this if we wanted to. So we could add another, state modeling if we wanted to do that. We could add some other entry signal on top of that one as well. So then both of those have to be met. So we could say state modeling has to current be a bullish. So then that's going to be another signal that we add on top of that. Does that make sense? So when we're looking at that Adobe and we're wanting to do this back test, do you want to add more signals to that back test, or are we just wanting to look at that growth fundamental grade A?
Oh, I don't know. What do you think?
So we could do it a couple different ways. I mean, when we pulled out the screener, we pulled out a bunch of different things. So we pulled out, we wanted it to make sure it was going to be a grade A, and we did pull out the bullish states as well. So the other two were basically the price, right? So we pulled out the price, and then I thought there was another one, right? What else? Oh, we did a stock. We wanted to make sure it was an equity. So those two are always going to be a given. Not always a given with Adobe. The price, stayed fairly consistent within that range, but it's always going to be a stock, right? Because we're using Adobe, so we don't need to put that screener there. So these are two of the main screeners that we use whenever we pull it out Adobe from the system. So let's use these two as our entry signal.
So then you just go to next, right? Oh, you're good.
Yeah, I'm going to put in I'm just going to put in here grade A, just kind of as a second descriptor, just so I don't get it mixed up with any other stuff that I might do later. And I'll do bullish, state modeling, something like that, bullish state. So I'll just put like that descriptor in there, because this automatically populates since we're doing a quick back or not a quick back test, but we're using that quick link. So it just comes up with the entry name for us to make it easier. You can always change this name as well. You can just come in, delete it, and change it, but I'm going to leave this as it is there. But you can change it if you want to do so. So yeah, just exactly what you said, hit next. And now we're going to do an exit signal. So again, same way with the entry signal on that quick link, it did the entry name for us. It's doing the exit name for us as well. So we could say, let's maybe exit this stock. Let's exit Adobe in state modeling when it goes into any bearish state. Now, as we know, it can happen pretty quickly, but I just want to do this to kind of show you a good example. So I could say, I want to get out of this position if it transitions into any bearish state. So if it transitions to a bearish state, I just want to get out of the position. So now I'm going to do bearish.
Okay, Shawn, would that just give you a signal? Then if you're actually executing this trade, would it just send you a signal that it just went into a bearish state, so you want to exit your trade? Is that
That's
what-
right.
that's
It
what
would
I'm
send you a signal saying, hey, it's time to exit the position based on the back test that you performed if you saved
Okay.
it. So transitioned into state 2. So if Adobe transitions into any of these bearish states at any time during the life of the trade, it's gonna exit out of the trade for me, no matter if it's a profit or a loss. So if I hit next here, now it's going to ask me for the entry exit date. So again, entry exit dates, the name's already set up because we did the quick link, and it's already putting in Adobe. It's going to run it in the background, no, and then basically we can select the time frame. So I'm going to select the entire time frame. We'll see how long it takes to actually pull it up, but we can see the entry signals here. Entry signal is going to be the grade A like we talked about. If I click on that, it should pull up a window showing me that particular screener.
One more question. Would you put in a exit, like if you were doing a call, say put in like a 90-day or 60-day on that entry exit dates also?
I usually don't myself, but you can definitely. You can either put it in, you can put in the state modeling. You could use a time stop here as your exit signal if you wanted to do so, but you could also put a time stop or similar to a time stop whenever you're setting up your trade rule. So this one should, our next page, when we come up to this trade rule, we could set that time stop in there as well, saying, hey, we want to make sure we're out, in 60 days, or if you're doing 90 days or approximately 90 days expiration on your options, you could say you wanted to get out of the trade no matter what 20 days prior to expiration, because you don't want that time decay to hit you too hard on those options. So it should pull that up here. I'm not sure why this is running a little bit slower than normal.
I have a question, Shawn.
Yes, please.
You were starting to go someplace else to do this back test when I said, oh, can't you just click on that little icon there in where we were looking? Were you going to go back over to another place to look at this screener and set it up? I mean, sometimes I get confused with the fact that you can back test in one area and then you go over and back test someplace else.
Yeah.
That confuses me.
Yeah, I mean, there's tons of quick, or for the lack of a better word, easy places that you can do these quick links and start that back test. But again, when I'm starting this back test here, as you saw, it's automatically starting it with this current grade A fundamental screener.
So that would be the preferred way, rather than going back over to the menu thing and
right.
Right.
As long as you want to make sure you want to use that, then that quick link, and then it starts that back test off for you. Okay. What I was going to do is I was just going to click on the sandwich bar, come to back test, and then click on my wizards, and then just start a back test. So all those 2 or 3 clicks that I just did were skipped by when we came into here to do that. So it's the same setup. If I hit go here, you'll see a similar type setup as we had on that first page, but the name isn't already provided for me, and the signals not already selected.
Okay.
So when I do it, I just like to kind of start everything fresh, just because I can start it all fresh in my mind and start the back test, from a blank space going forward. Whereas here, it's just populating that information in for me. So, it's whatever you're just used to doing. I'm just used to coming in here and starting a new one and kind of going that route, That's just my preferred method, but the quick links are good to use. So.
All right, thanks.
This is just taking a little bit, so let me just see if I can start one here. I'm not sure why it's stuck it, but what it should do is when I click on this indicator here, it should populate that little screener page that says, grade A fundamentals, a minimum A, and a minimum of score 10. If I clicked on state modeling, it should show you, bullish states have been selected. So those screeners are exactly what you selected before. So I'm not sure why it's still loading there, but let me look at this and just say, grade A with bullish state. And then what I'll do is I'll say grade A, so state modeling, current bullish, and then the grade I think is down below. Let's see. So fundamentals grade. So if I do current grade A and at least a 10, then that's showing up there. If I click back, that's still spinning. So I'm just going to close it out. So if I hit next, so it saved it, I could hit signal, and what we said was we would select bearish, bearish state. Can't type, excuse me. So bearish state, so state modeling, current bearish, that's going to be my exit signal. If I hit next, oh, it's going to say it already existed. So let's say.
It's not transition, it was current.
I could do transition, yeah. I mean, it's going to be the current because it's going to be a current once it transitions, but yeah, that's a good call. Let's do that. So transitions into state 2. So bearish state, let's do version. I'm going to do version 1 because I might have another name. So that leads me to my next point is if I already have a signal created with that same name or that same signal, all I have to do is click on this little signal drop down here, and it shows all the signals that I have set up plus all of the predefined. So again, predefined are ones that Delphian have set up previously. User defined are all the user defined ones that you have set up before. So you might find it there, and you could always do like, if you wanted to do state modeling, you could type in state, hit search, and it's going to pull up all the states or all the signals that have state within the name. So we can see it drop my list down from 400 plus to 120 plus.
Okay.
Hey, Shawn,
Yes.
all those signals, will they be your Delphian alerts emails?
The signals, I don't think will come into your alerts. You're talking about like your personal alert as an email?
Yes.
You can set it up. So you could set it up to where you have that daily alert where it would show up maybe if a stock had matched that particular entry signal for you. So then you would know a stock has matched that entry signal, meaning you could set it up to where if a stock comes into grade A and it's in a bullish state, you would get an alert that it has done so. I believe you get an email. Is that right, Josh? You can set it up to where you get an email? If Josh
Yeah,
is still
it'll, if you hit create the daily alert from the backtest, after you do a run and you making an alert, then yeah, you'll get an email saying you have a daily alert. So then you can go in and check it. It's right next to the studies and the screener too.
right.
But it'll populate the exact characteristics, the bull call that you designed. It'll populate that exactly how you backtested it for the current situation.
So if you set it up when you wanted to do so, you would have your daily alert would come in here. And let's see, I have some that show up. So then you could see this was one that I'd set up from a previous back test, and I have a daily alert. So if I clicked on this, then it should populate with what that alert was. So I did one with a SPY, 3%, 15% drop within a certain number of days, things like that. So that's where if you set it up, it would say, hey, you got a daily alert, and here's the trade based on that. So we did. Go ahead.
So that's a separate.
Well, I'll show you.
Yeah.
I'll show you once we do that. Once we pull up the run for this one. So we know it's going to be Adobe because we talked about using Adobe. So I'm going to do Adobe grade A bullish state. And then what I'm going to do is I'm going to use Adobe. So again, I can use Adobe because we know we're talking about Adobe. But if I had that list of 4 stocks that I wanted to use, I could click on stock list, put that in there, and then it would run it on the actual all 4 of those symbols that we looked at earlier. How we had the list from 17 to 12 to 4. But since I'm only going to use Adobe, I can just type in the symbol here, Adobe. Run in background, no. I can click that, and again, I'm not gonna start spinning again. But if I clicked on these, it should show me those screeners like we set up just previously. If I hit next, now what it's doing is when I hit next, is it's basically looking for these entry signals, and it's looking back in time all the way to 2007, and it's going to pull out how many trades would have been executed based on the entry of these 2 signals together over the past 13 years. And then it'll tell me, and then we can move on to the particular trade rule at that time. Does anybody have any questions thus far while it's kind of spinning?
I don't have a question on this, but when you get done, there is a weird error occurring on your state transitions bulk screen,
Mm-hmm.
which I'd like to show you when you finish this.
Is that similar to what you're getting earlier today, Sudhir? Or
No, it's different. I'll show
Different.
you.
Okay.
On the exit date, can you go in the future? So, or do you always have it from current date?
No, yeah, it's your exit date's going to be today would be the last day that we have data on. So today would always butt up and basically close at last night's close. So if my entry was still valid but my exit has not been valid as of yet and it comes up to today, it's going to automatically close the trade as if last night was the last trading day for that particular position, because we don't have any more data obviously moving forward. But that would be cool if we could do that. So it's just taking a second, so sorry. But yeah, so has everybody used the backtest functionality, or is this something that some people have used and some people haven't used it? So this is a good time spent right now showing this.
I think there's some that have and some that haven't.
Okay.
Yeah, I use it.
Yeah. No, that's cool. I mean, it's a great tool. I mean, it's the main part of the system is the backtest portion. And I mean, I'm asking too, because before many of you were members or using the actual platform, it was, for me, even coming on as a new employee, it was a really difficult portion of the platform to figure out, like, what do you mean by an entry signal? What's an exit signal? What do you mean entry exit dates? Am I supposed to provide dates here, or what is this doing? I don't understand. So, what we tried to do above and beyond that was, use the wizards to make this section a lot easier or more user friendly, if you will. So, obviously showing this and you guys having some, critical thought and critical thinking into the process and why we're doing what we're doing, and having constructive criticism helps us out and helps us make it better. So, it was very difficult, and I think it's obviously progressing into the right direction. But if there's areas where you see that there could be possible improvement, again, that's part of that feedback tracker that Josh was talking about. Use that, because those are things that we discuss every morning with Ashok and the team, and things that we can, try to work on to see if we can make it better, so.
Yeah, I think you can thank Gene and I for getting Ashok to populate the entry and exit date names, because we were going, why do we have to keep naming these things? We had to keep coming up with new names and things like that. And he said,
right.
And he started populating it for us, and then went, oh, great, okay.
Yeah, and it's great. It's great too, because it timestamps it, right? So you can kind of, if you look back to yesterday, like, all right, what was I doing yesterday? And then you can kind of figure it out and think about what you were doing, versus, because I had the same problem, right? When I first started giving things a name, I wasn't very systematic in it. So I would just be like, okay, that's what this is. And then I go back and I'm like, I have no idea what that was. So being able to kind of systematically do it and have the system, and then you can change it. I think that helps. So
no, that was a huge help, and that was right in the beginning, because it was like trying to understand that you're absolutely right. Trying to understand what is entry signal and what is exit signal and what does all that mean. So
right,
he's getting through all that terminology that's unique to Delphian.
I think one of the main reasons I don't use it that much is for what we're seeing right now. We could get kind of frustrated with, we're trying to do something, and we just get seeing the circle.
Right.
Russ, don't go back to 2007. That's my suggestion. Go back, go back a couple years, but don't go back that far.
Yeah, definitely do that. I mean, definitely go back, 1 year, and then you can always do the extend on the actual backtest to extend it to go back another year if you didn't get that many results. I didn't think we'd have that many results. I didn't think we'd have 452 trades. I thought maybe I'd have 100 at max. So I just wanted to kind of show you guys the example, but obviously I chose it wrong. But what I wanted to show on that previous page, I won't go back right now, obviously, but it does have that run in the background, and you can click run in the background, yes, and then it'll run that entire procedure in the background, and you can still go within the platform and kind of do some other things while it's running. It'll show up here once that has been completed. So you'll be able to see that entry exit date has been completed by that 1 there. And then you can obviously start back with that procedure later if you want to do so. So yeah, I apologize. I didn't know there was going to be that many trades. So, so now we're at the trade rule. So now we can basically say, you know, Adobe, I can do Adobe and I'll do like a bull call spread. You know, what we can do is, let me do Adobe long stock for now since it were so many trades, and then we can, well, let me just do the bull call spread. That's what we were talking about, right? So, bull call spread. Okay, so then I'll come into my, I'll give it a name. I'll come into my strategy. I'll do a bull call. So here we can say mid price, you know, 50-50 is what it's going to do. This is what we mentioned earlier, stops. I can say ignore exit dates. I don't really want to do that, but I can say stop after a certain number of trading days or exit, you know, 20 days prior to expiration. So I can use either one. Typically what I'll do is I'll start with a massive test. So I'll kind of leave everything basic. And then my progression is if I find the results I like, but I want to try to optimize them, then I'll say, okay, well, maybe I can reduce some of my losses by, you know, getting out 20 days prior to expiration. So I'll add that in after I get my initial results to see if I can optimize it using other different little tidbits that are available within the platform. So at first I'll start basic and then I'll run, you know, later and do, you know, more details if I want to do so.
That's good. Good.
So I'll leave that blank. Bull call spread, it's obviously going to do monthly, not obviously, I'm sorry, automatically it does monthly, minimum days 60, maximum days 180. We can change this to be tighter or, you know, more narrow if we want, or expand it to go, you know, further out if we want to do that as well. I'm just going to keep this all how it's set up. Bull call, we're going to buy a 45 to 70 delta, which is typically going to be an at the money or in the money call. We're going to buy that, and then we're going to sell strikes from leg 1 above. Obviously, all of these are customizable. We can change it to however we want to do so. Typically, I'm not going to buy my bull call. My option I buy is not going to be in the money, but that's just my personal preference. So I'll make some adjustments to this possibly to test how I would do it. Profit, 80% profit on max profit. So we know that if we're doing a bull call spread, if we are able to make, you know, $1,000 profit, we're looking to make 80% of that $1,000, which would be our max profit, and then 50% loss on the initial cost. So if the initial cost of the trade's $1,000, we're willing to lose 50% of the 1,000, and then that's what our stop loss there. Special adjustments, I'm not going to do any of these right now, and then the hedge is kind of the iHedge stuff we talked about before. Adaptive management, adaptive trade management would be you could actually do a variety of different trade managements based on the states and things like that. So I'm not going to use that either. If I hit next, now it's going to run to my preview page. And we've talked about this one before as well. Entry exit dates automatically populate with the name that I gave it just a little bit ago. My trade rule of the trade strategy that I just set up as well. K20 trend is just the group trend that it saves it in when it saves it in the organizer. I always use risk per trade contracts, and I always use contracts 1. That's what we've talked about before. I don't want to use a dollar amount myself because if, you know, I want to see that trade. If the trade's going to cost $2,000, I at least want to know if that was a winner or a loser. But if I say only show me trades $500 or less, then I'm not going to be able to see those more expensive trades, and that might skew my results quite a bit. So I always want to do just contracts 1, and I know that if I want to make an adjustment based on, you know, dollar amount or contract size, I can do that myself. So if I hit back test, this might take a little bit of time because we know there's 452 trades, but it's going to show up once it starts coming. So have you used that run in the background feature when you've done the back test before, anyone? Because it works really well because you can still kind of mess around with the platform so it doesn't hold you up. But I can't disagree with you that it is somewhat frustrating whenever I come in there and I do get that spinning circle and I can't make any movements on it. So does anybody use that run in the background?
Sometimes I do. Sometimes
Yeah.
I'll set it, but I don't ever go back as far like 2007. I'll go back a couple years. So
Right.
sometimes if it's running, I mean, I'll get up and walk away, and I just listen for that little bing. You know,
Right.
it tells me to come back. It's done.
Now when you do that and you've ran, so let's say instead of using the entry exit dates all the way 2007 to current day, let's say you just do 2000, and let's just say you do this year for 2020, and you get the results, and the results are really good. Let's just say it's a 90% win rate. Have you used that extend button to when you go in the
No.
back? You haven't used that one? Okay.
No, I never have. I might, no, if once I set the dates that I'm going to run it for, then I'll just keep adjusting the trade rules to see if I can get some better effect. But no, I've never used the extend. Didn't know we had something like that.
Yeah, let's see. I believe everybody should have that as well.
Okay.
So let me go in to see. So if I click on this little play button here, it's going to pull up most of the recent back tests that I've completed. Let me find one. Let's see, one that I've done. I don't know which ones I've done. So see, that's the problem with me naming them, right? If I click on that little bar, let's see, bullish date. This is one I think we did for the group. I might have went all the way back in time for this one. Give me 1 second, run to, I think I went all the way back in time for this one, but I'm just looking to see if I did.
Yeah, I don't think you did actually, because I kept duplicating it, running this until I could get your results.
Until you could see them. Okay. Yeah, so this,
correct.
yeah, this one goes from, so this one's 2019. So it goes from 2000, January 30th all the way to current day, or current day at that time that I ran that report. So now that I'm in this particular run and I'm looking at this summary, I can obviously do a couple of different things. I think what we've talked about before is clicking on this little summary X here, and it'll do a breakdown. Here we're only, we're looking at multiple symbols. So I might have shown this on that PDF, but if you click on that, it's going to show us, group by state. We've obviously did the whole backtest in state 2. This is a backtest that I did for that document that I created for everyone within the group, which was, basically buying a stock or going long a position when it's in state 2. So just to refresh everybody's memory, that's what this backtest is about. You can obviously do group by symbol, and then that will show you the results based on the actual symbol itself once it pulls up. And we can see that it groups it by symbol, and it shows me it's alphabetical order here, and it shows me my win percentage. I can select win percentage here, like an Excel spreadsheet, and it'll sort them by win percentage. So all of these symbols are 100% win rate based on buying that position or using a long position when this particular stock goes into state 2 and has met, I think it's target 3 is what we used.
Right.
But you can group them by symbol, by year, things like that as well. So that's a useful tool. Now, what I was going to show you is basically when you're in this run summary here, you can come up and hit this extend button. I think everybody should have that extend button.
I don't think we do.
Josh, correct me if I'm wrong. Did we release that to everybody or no?
Yeah.
Oh, we do?
So
Okay.
try to find that later. If you hit extend,
Okay.
and then what it's going to do is say, extend your entry exit dates. Do you want to go backward or forward? And you can say you want to go forward to a certain date. And the reason you'd want to do that is because let's say I generated this report 2 months ago, and I gave you the PDF 2 months ago. I could say extend to current day, and then it would capture any stocks that have met that particular criteria within the past 2 months, all to current day. I can go backwards and say, okay, well, I know I ended it in 2019, so let's say I wanted to go and do 2018, and then maybe from August 1st, 2018, and that's only 6 months, excuse me, but you could hit extend, and then those results will show up in that back test for you as well.
Oh, that's cool. Okay, excellent.
So it's a cool feature if you find a strategy that works and you don't want to run through the whole redo of the back test. You can use this extend button to go back or forward if you want to do so.
Awesome. Okay. Cool.
So mess with that as you see fit. This is still running. Let's see.
Shawn, can you explain rejected again?
Yeah, the rejected trades. So we got 7 rejected here. If I scroll down, we'll see some of these rejected. these are all your rejected trades are going to show. So you got your summary results here. It shows your rejected trades here, and it'll typically show you the reason that those trades rejected. So now all of these are showing one of them.
Well, I guess my question is, if you already have your criteria, why would they be rejected?
Yeah, if there's not a delta, so sometimes as Josh had mentioned earlier regarding like those SPX options, or some options, maybe a day worth of data for some reason was inaccurate that we received over from the exchange that sends us that data. Maybe these options aren't highly traded, so just that delta, that particular delta wasn't there. I did a pretty tight delta on this one. Let me see what I did. I thought I did like a delta of 30. But let me just look to see what we did. So all I did was I just clicked on that trade rule to see what the trade rule was when I set up this trade. So I did 30 to 70, which is a pretty wide, obviously that delta range is really wide. So most stocks, obviously if they're trading options, they should have a delta within that range. But what this is showing me is that those particular stocks didn't have a delta within that range. So what I'll do is if something looks really askew and I can't figure out maybe what was the reason behind it, what I'll do is I'll take a symbol like, you know, this is what AFLAC here. So AFLAC from August 2nd of 2019. So AFLAC, so August 2019. So what I'll do is, so my entry date would be August 2nd, 2019 for AFLAC. So what I can do is I can come in, let me duplicate this. Let me go into my options chain. And then once that uploads for me, I'm going to go back to August 2nd of 2019. If I type in AFLAC, or sorry. Is that not, that's what it was, right? AFL, sorry. AFL. All right. And then we're going to basically look at no options available. All right. So let me see how many AFLACs it did. So what I'll look up is I'll look to see, does AFLAC have any options available on that day? And then if it does it have any options available within that delta range? And I would suspect that there's no options available within this delta range on that day when it entered this trade. So I want to look back to see how much data we have on AFLAC within the system. But as we can see, I'm on August 2nd, 2019 under the symbol AFLAC. If I hit expiration date for options, it's not showing me any options available. So that's definitely the reason that the system is pulling that reject. It's saying, hey, look, we're trying to enter the trade on August 2nd, 2019 based on your long call strategy, but I can't find any options to trade based on that strategy. So that's why I'm getting that reject here. So, you know, for me working for Delphian, what I need to do now is I need to find out, why do we not have any options on this particular day? Are we just missing that file? Did we not get that file sent over from the exchange? I'm sure AFLAC was trading in that particular time. So then I just have to see. So, but you can see this table is missing. So that's why we get that reject like we did on this AFLAC. And some of these other ones should be similar, or they just don't have an option within that delta range on that particular day that it was entering in the trade. So I'll usually do a little more research and see why am I getting these rejects. 7 isn't a huge number of rejects for these total number of trades that we're looking at. However, I still want to make sure and look to see why am I getting some rejects, because maybe I can adjust something within my trade rule so I'm not getting, you know, these 7 rejects.
Well, I guess, again, it's kind of confusing if you already have your criteria that, you know, you want grade A, you want this between, you want a bull call. I mean, you're just doing a query of, okay, these are the trades that would execute and not really have any rejects.
Yeah, well, I mean, your criteria is matching. So it matched the criteria based on grade A, or this matched the criteria based on state 2, target 3 being met. But after it's found the entry date when it's going to enter into this position for AFLAC, then the system goes in and says, okay, well, now I'm going to find an option that has 90 days to expiration with at least a 30 delta. And then when it did that, it comes into this option table and boom, there's no options for it to buy. So the system says, hey, wait a minute, you know, I found when I want to enter into this stock and I want to go long, but I don't have any options to choose from. So then it hit that reject for me.
Okay.
So it found the entry date because these are all the dates that it should enter into that position. But when it looks to find that one, it says, wait, there's no option there for me to trade. So let me look at this SYMC on 8.6 real quick.
Well, this is what Ashok said, that he's got data on long, you know, I mean, for buying the stock. A lot of these stocks are out there, but we just don't have they're not optionable yet in your system.
Right at that time, they might not have been optionable yet, or just that table for some reason isn't showing up. So now this one, so for this SYMC on August 6, 2019, so the system's telling me that, hey, state 2 target 3 has been met on 8/6/2019 for SYMC, and now I'm going to go in there, I'm going to try to find an option that meets the strategy criteria that you selected previously. So now if I go in there and I want to look at something that's approximately 90 days out, so let's say that I'm going to look at, you know, this October option here. So August to September, September, October, that's only 60 days. So let me pull up January. And now, you know, we can see, let me hit table. That was the graph display. But if I look at the table, you can see that it's not showing me any options available for that particular expiration. And so that's why I'm getting a reject. So it says, hey, you're telling me you want to buy this stock and you want to buy it, you know, using this long call, but I don't see any long calls available. So it's just going to reject the trade on me. Let me look to see if there's any here. Oh, sorry, I meant to do a different day. So now we can see even some of these other expirations, there's 0 strikes available for that particular stock on that particular day in that time frame. So that's why I rejected that other trade. So, you know, we're probably going to see something similar for these other ones. And like you said, I mean, there could be a variety of reasons that stock might not be optionable yet at that time. So there might not be any options available. So it's just going to give me a reject. But, you know, like you mentioned, if I come in here and I click my trade rule and then I just change my trade rule from a long call, maybe just to buying the stock, so doing a long stock, I shouldn't get any rejects because those prices should be there for buying that stock, right? Does that make sense?
Yes.
I could probably, I think there's like 400 and something of them. Once this one comes up, if it comes up, I'll try to refresh that other one for you. But if you did that for a long stock, then that would show, you know, those rejects wouldn't be there. So, so now we can see, so this is the Adobe grade A, the bullish state. We can see the run shows was here, total profit of 11,000, profit factor is kind of low, 1.49, a low 37% win rate. So we can see basically that it's not doing that well based on the bull call strategy. Doesn't mean Adobe is not a great stock to buy when it is grade A and it's in a bullish state, but it just means maybe this bull call strategy might not be the most appropriate or the most optimal strategy to use when Adobe shows those particular signals. Maybe we would want to try, like, you know, the bull put spread, or maybe try a long call, or maybe try a long stock position and do it that way. So that's our results for this one here. So, you know, what brought us to this, you know, in the first place was looking at that option screener, right? So if I go into the option screener, and then I pull up the bull call, once it shows. So what brought us here was just using this option screener and finding Adobe had come up on the bull call strategy list, and that this was saying, hey, based on these particular parameters, you know, this is what you would want to buy if you wanted to use, you know, 1% of a portfolio risk and a certain delta and things like that based on that screener. It doesn't mean that that stock is the most optimal stock that you would want to buy today. You would need to go into that custom screener and find, okay, well, what am I going to use to buy a stock today? Okay, well, I want to use something that's in state one or transitioned into state one. It has to be a grade A. And now when we did that using Adobe and using the backtest on the bull call spread, we could see that, we can see that we're looking at about a 30% win rate. Now, I did construct my trade rule possibly a little bit different from how this option screener is constructed here whenever this bull call strategy pulls up. So I could mimic this criteria closer to my trade rule here, and I might get a different win percentage. But as we can see, based on Adobe going into state one and using that grade A fundamental analysis, this bull call spread might not be the most optimal trade to do because we're at a 37% win rate. So even though it shows up on this option screener as a trade that you might want to do based on that bull call strategy, once you dig a little bit deeper and backtest it using certain signal criteria, it might not show up as well as you thought. So, now we got to maybe circumvent.
Shawn, you're using August of 2019.
Say again? Oh, yeah. Was I using it there? Oh, yeah. Sorry. That might be why it's slowing down too. Thank you. Make close out of that. Sorry about that. Thanks. So now we're looking at this one, current day. Once it pulls up, let's see. Stocks. And you can see I do that a lot of times too, where I have to say, okay, well, something doesn't look right. Why is it not showing what happened there? And so that happens as well. But does that kind of make sense to everyone? How, I can find symbols in here within this screener, but the screener is exactly what it is. It's not telling me what's the most optimal signal or strategy for that particular stock based on those signals. It's just giving me a list of stocks based on these screeners that might be, some good trades that you could look at. So what I want to do is when I find that list, I want to basically optimize that list to meet what I think is going to work based on certain signals. And then I can use that to backtest it a little bit further. Does that kind of make sense what I was doing there?
Yes.
Yes.
Yeah.
Okay.
Yes.
Good. Thank you. Because that's huge, right? Like you can say, hey, all these stocks show up great on this screener. Well, great. They're good candidates for that screener. But what is the reason that you're actually going to buy that stock or sell that stock? What would be the reason that you would want to get into that position? And then first you need to make that a signal and then apply that signal, to this particular stock or set of stocks, if you will. So we can see here just real quick while it's loading, this criteria here is 60 days to expiration. I think on my trade rule, I had 90. We can see the buy leg delta is between 40 and 80. I think I had like 45 to 70 was my default. A distance between the leg, it has to be at least 50 points. So obviously at least that 50-point difference between the legs is going to be substantially different from, the one strike above that I put on my trade rule. So, I can adjust that pretty easily. I can come back into this group here, Adobe. I can click on my trade rule. And I can say, if we look at that Adobe real quick, you can see it's buying a 405, selling the 455, 50 points or 50, points between my strikes. So when I do this trade rule here, I can say something like, okay, well, let's do at least 90 days, just like on that screener. What did it say? 40 to 80 delta. I can do 40 to 80 delta on my buy side there. Strikes from leg, I can say, okay, well, I want it to be at least minimum points above 50. And then I can keep my profit here, similar 80, 50 as well. So what I did was I'm trying to construct it to pretty much mimic this criteria here by basically saying 40 to 80 delta, 40 to 80 delta, 60 days to expiration with a minimum of 50 points. I'm sorry, 60, I said that. So 60 days to expiration, and then I have all this constructed the same way. So if I hit backtest, it's just going to run the backtest again, so it might take a couple minutes. So let's just open that up to any questions if anybody has any questions on what I just did there. Nope, good. I guess I'm better at this job than I thought I was. So great. So that's how I do it. I might find stocks that match the screener, but I want to first know, okay, what's going to make me get into the stock? like Josh mentioned earlier, the market's kind of mixed right now between the Russell and the SPY. But let's just say I'm bullish. Okay, I'm bullish the SPY. I'm bullish most stocks because I think the market's going to go up until the election, or might get a little choppy, but maybe I can play on some of that volatility. Okay, so now I know I want to be bullish. Now what are some good bullish signals that I might be looking for in the market? Okay, state modeling is a good one. Grade A is a good one. Maybe something moving, near the upper standard deviation might be another good buy if I think it's going to go higher. Use those signals and then add some of these stocks within a stock list to put to those signals and then back test it. And then maybe I can find one stock out of this group that shows above a 90% win rate over the past 13 years when those particular signals have been met. And then I can apply that strategy to my daily trading. So.
The parameter you have on there has 15% potential profit, yet when you selected, you wanted on at 80%.
Yeah, this is a minimum profit potential of 15%. So just basically, yeah, this is just the standard. I haven't adjusted this screener within my general settings. So this is just the standard how Ashok had sent it out. But yeah, minimum profit potential has to be 15%. And I believe that means just the difference between what you're paying for the spread. So your potential profit, basically what you're paying for the spread and your maximum profit potential on that spread. And then you have to be able to make at least 15%, is what I believe that means, right? So here is saying, because here you're looking at what, 50 points. So basically you can make $5,000 on this trade, but we know the risk is almost 3,000. So it's costing me 3,000. So that means that I could make 2,000, right? In theory, if I'm paying $3,000 for a $5,000 spread, the most I can make on that trade is going to be 5,000 minus my $3,000 or $2,000. So I think that profit potential has to be at least 15%, which it is on that particular case. Is what that screener there is showing.
Is the preference to use in the money?
Not for me, but I know for Ashok, he likes constructing the trade like that, and I see the valid points in doing that. But I typically haven't done that in the past. I see the validity in doing that by buying a bull call spread, where your option's in the money, and the reason to do that, especially some of the times when he's buying those bull call spreads, the call that he's selling is at the money or near the money, and that basically is where you're going to typically have the highest premium or be able to collect the highest premium. That intrinsic value is going to be the highest, so you can collect the most intrinsic value premium by doing that. But I typically just don't trade my bull call spreads that way. I typically almost like my long call. I would rather have a good I'm risking 1 to maybe make 2 or make 3, something like that. That doesn't mean that's a better strategy design. That's just typically what I'm used to. That's typically how I'm used to trading it. His bull call spreads are similar to the bull put spreads, right? When you buy a bull call spread that's in the money, the stock can really go, 2 out of 3 directions, and you're going to make money on the trade. The stock can go up, and you're typically going to make money. The stock can go sideways, and since you're doing a bull call spread that's in the money, you're typically going to make money. The only way you're going to lose money most likely on that trade is if the stock goes down and goes down in a hard way. So I see the validity in that because you can make money 2 out of 3 ways. But I typically just haven't done that in the past for myself. Anybody else have ideas on their bull call strategies and which ones they would prefer to do?
Shawn, I think I didn't catch something. You said that Ashok buys in the money and he sells the leg at the money. Is that what you said?
Typically, right at the money, either just a couple strikes above or at the money, right? So when you see some, go ahead.
For the short strike, but the long strike is in the money, right?
Yes, ma'am. Yes, ma'am. Correct.
Okay.
So typically, you'll see something like, no, go ahead with your question if you had a question.
No, I was just making sure I understood that. You usually buy 1 or 2 strikes in the money and 1 or 2 strikes out of the money? Is that what you said?
Yeah, I'll typically be around it, or even sometimes I've bought ones that are just both out of the money. So I might buy a strike that's above the market a little bit, and then sell one that's at the upper standard deviation or something like that. It just depends. I don't trade the bull call spreads a lot, enough to give a great opinion of one way or the other. But yeah, typically those are the ones that I've done in the past. And when I'm talking about my past, that's the past experience trading the commodities. I mean, that's typically how I did it, trading commodities. Now, using Delphian as I've been doing over the past couple of years, I'm typically either trading long calls or, those bull put spreads. I like those as well. So, or the earnings slide, things like that. But you can see, this bull call spread here. Let's just look at one of these studies that had come up, and let's just look at how this is constructed. Because these are constructed basically just like that. You're buying an option that's in the money, and you're selling the further out of the money. You're selling the other option basically near or at the market. So, let's look at this AMAT. So the stock itself is at 55.63 when this alert had come out last night. You can see with this bull call strategy, you're buying the 42 strike, you're selling the 57.50 strike. So you're selling an option that's just one strike above the current close. So does everybody see that? So that's, it's not at the money, but you're pretty much selling just one strike above the current close. So you're buying, I think these are constructed as buying an option at the lower standard deviation, and then you're selling the further out of the money option just one strike above the current closing price. So, we can see when you're doing this trade based on settlement last night, max risk is $940. So you're paying $940 for the trade, and your max profit is $610. So, you're basically like a 1.5 to 1. So you're 1.5 risk, 1.5 risk to reward on that trade.
And that's about what, 5 months? That's a 5-month trade.
Right, because these are constructed 90 days out. So if they're 90 days out from last night, there might not be any options for November or December. So then the next one it's able to pull is going to be your January.
Okay.
Because it's going to see 90 days. And if it doesn't see anything for 90, it's going to go 91, 92, 93, 94, all the way until it finds an option, which again, like you said, is January. So, you're talking almost four months out.
Okay, thanks.
But these can be constructed, if this is a trade that you like, if you like AMAT and you like using a bull call strategy for this particular study and this particular signal, you don't have to use this exact construction of a trade. You can obviously use your type of bull call spread and just run a back test on this. This back test has been ran using those particular trade design or trade rule setup, but you're always welcome to go in there and test your own strategy. So maybe you don't want to do a bull call spread like that. Maybe you want to do it differently. Go in there and test it. Or maybe you want to do a bull put. You can obviously see the bull puts show up on this list, but if this bull put spread construction isn't exactly how your trading style would be, feel free, go in there and change that trading strategy to match, the style that you typically like. And if your results are, as good as these or better, then great. That's the strategy that you should employ. But we just set these up as obviously a basis for everyone, and then you can kind of, optimize or use your own strategy based on that.
They had a column called correlation. What are they correlating against?
So this study here is the 5-year SPX correlation. So the stock has to be the stock needs to have a 5-year correlation with the SPX higher than an 85, I think is what we set these up as. So you can see this is an 87.
Okay.
So this stock VRTX has been highly correlated with the S&P 500 over the past 5 years. And you can obviously click on this here and it'll show you the indicators or the criteria that was used to match this particular study here. So 1,260 days is going to be your 5-year trading days, and it has to be higher SPX correlation is greater than 85. And the state 2 target 3 had to be met on that particular day, which was yesterday, for this signal to populate. So I know we're kind of jumping, all across the board with the different things that we're doing here. So please, anybody, if you have any questions, feel free to shoot them my way. I'm still running this back test here to match, our options screener here. So once that pulls up, we'll be, I'll show you those results there. So does anybody have any, and like I said, I know we kind of did a little sporadic jumping around, but does anybody have any questions kind of on what we did here?
No, I think it was a good review of some things too.
Yeah, I don't want to keep you guys on the call for too long. I don't know if we're supposed to go till 3 or 4, but there was a couple things I definitely wanted to talk about. I mean, the screener was something I really wanted to go over. And we kind of did that, but I just want to make sure everybody's using that. The studies are really what we're looking at here. And, I want to make sure everybody's using the studies also, because I think in my mind, Josh, myself, and Ashok, we spent a lot of time, designing these studies, and these studies are really great areas, I think, that you can look to find good stocks, good candidates for stocks that you can use to trade. Doesn't mean that, if you see something like this 10% pullback, this long call strategy, CPB, which is Campbell's Soup. Sorry, Sudhir. I think Sudhir said he made a little money or broke even on that, but CPB comes up as this 10% pullback. So I'm not saying that I want you to trade this long call on CPB, but maybe use a signal or use these signals to say, hey, maybe CPB is a good buying opportunity today. And if it is, let me test it using maybe some of my own signals, or maybe let me test it using my own signals and my own trading strategy. And maybe I can find a better win rate than what should be displayed here. It's not displayed here, but let me find something maybe that's better. This might be a good starting point to find good stocks that might match some of your trading ideas, and then you can expand on these symbols further using other parts of the system. So what I'll do is if I believe in this 5-year SPX pullback as a signal, I might take this stock that shows up in this particular criteria here, and if I want to trade, maybe, a bull call spread or a bull put spread or a long call, maybe I can take this VRTX and come over into my options screener and maybe put that VRTX in my options screener and see if there's a perfect strategy using that, and just kind of, just mess around with the system, use different tools within the system to try to find an answer maybe based on, the same symbol, or see if you can find something that might spark, something else to think about within the system. The studies, like I said, these are really great to look at, great areas to find different symbols to buy. Obviously, if you're not bullish, if you're kind of worried about what's happening within the next couple months until the election, or not worried, but obviously a little more concerned than normal, track these. Use a virtual portfolio to track these and see how they're working, or just follow them. But in a normal circumstance, I think in a so-called normal environment, these are really good trades to look at. Studies, the state transitions, which I know a lot of you are looking at as well. State transitions is great. Use that bulk tool, or use just the analysis tool on this one. The seasonality, and then obviously those bullish pre-runners. I really like all of those. And the bullish pre-runners, like Sudhir mentioned earlier, earnings starts around October 14th or so. So really we can't get into those bullish pre-runners until probably another week or two. But I really think there's some great trades to be had within that particular section of the platform as well. It's just getting in there, getting used to the tool, getting used to know exactly what you're looking at, and then just kind of moving forward from there. So let me see if this comes up. Any questions, anybody? So it's still taking a second to come up. If it comes up and we're off the call, what I'll do is it won't be pretty, but what I'll do is I'll open up run 2, and then I'll attach run 2 plus this option screener for the bull call, and we can kind of look at and I'll send it to everybody in an email, and then we can just kind of have an email discussion on it. Not meaning it's going to be something that I would advise you to trade, because I haven't looked at it further, but at least we can kind of look at what those 2 reports are showing us and kind of see if we can come up with an analysis based on that. But yeah, I mean, I use the state transitions. Like I said, this Northrop Grumman, I actually did that trade today. I bought a long call on that position today. Say again?
while you're on the screen, this is the screen I want to show you the error
Mhm.
that's occurring,
Mm-hmm.
if you don't mind.
Yeah, go ahead.
Go ahead and hit bulk.
Okay. Now mine, let's see. All right.
So what I do, oh, I'm sorry, go to select bull put spread, which is what I usually look
Okay.
for.
Yeah. Yeah. So
And
bull put. So bull put, and mine just comes up. Again, I haven't really changed these in my general settings, but everybody know you can go into your general settings and change these. I typically know what I'm going to do, and I just kind of go through the motions. But go ahead, Sahir.
hit bulk.
Okay.
This is what I do when I find a trade. And this occurs in state 2, state 3. This happening just today. You'll see what I mean.
Yeah, it has to be based on what Josh was mentioning with the matrix. We're going into the matrix, I guess.
Yeah.
Because I was testing the matrix last night and this morning.
So now here's Stryker, SYK, has a 96.15 probability. Close that. So I'm thinking, hey, I'm going to take that trade, right?
96.15, yeah.
Okay. Now click on Stryker individually and hit analyze. Or it does that automatically.
It does it, yeah. You laughing at it, Josh?
No, I'm just saying that it's not lining up.
Notice it's 75%.
Yeah.
And I've had 2 or 3 of these today. Normally, the bulk, if you get a 96.15, then you go to the individual.
Right.
It's exactly the same, right?
Right.
Because what I want to do, the reason I do the individual is in the bulk table, it doesn't tell you how many trades.
Right.
So you want to go to the individual and say, oh, this was, scroll down, I can't see how many trades it is.
Yeah, 53.
53 trades. Okay, so if it was only 2 trades, then I wouldn't take it. But it's 53 trades and 96% probability according to the bulk analysis,
Right.
then I would take it. But now I go over here and it says 75%.
Right.
And I've done a number of these today and they don't line up. And usually on any other day they line up. So there's something that happened today.
Yeah.
The individual result should be the same as what's in the bulk result.
Right.
Yeah, I was gonna say because I thought it usually is the same, and even the weeklies come up as 75, 89.
And I did this on state 2, state 3, same thing.
And they all showed up wrong. Yep.
Well, like I would find one on state 2 that was 90% on the bulk, and then go to the individual, and it was much different.
Right. Right.
And it's only happening today.
Yeah, they must have done something. So
Has to be.
we'll send snippets of the error and they'll fix it.
Yeah.
Yeah. Yes. Well, sorry about that, but yeah, good thing you're checking both of them, and that's one of the pieces that I kind of wanted to come up in the bulk analysis as well. I'm not sure how hard it's going to be to do that, but like you said, albeit the numbers matching, I want the trade number results to kind of come over there too, because as you said as well, it's very important for me to see, 50 plus trades or, 2 trades, like you mentioned, that's very important in my analysis, because if it's only 1 trade, then great. I mean, it's not gonna be 96% at 1 trade, but if it's 100%, but only 1 trade, then I'm like, well, that's good, but I'd rather take the trade that's like 53 trades at 90%,
Exactly. You want to know that it's seen that situation a number of times, and then if the win rate and profit factor are acceptable, then you take the trade. But if it's just a few times, so then I don't take it if it's just a few instances.
Right. Now I wonder. Yeah, we'll have to look at that and see, and I'll get back to you on that too to see, because that's 89.36 for the.
Yeah, it's not even matching up. I'm sending me an email right now.
All right. So yeah, we'll get that figured out, but yeah, it's probably got to do with the matrix, because like Josh had said, they released that yesterday for us to test it. So I've been testing that. So we'll have to see.
That one matches.
Well, the win percent does, but then like you mentioned, your profit factor doesn't.
Doesn't, right. So I'm not taking anything today because I'm not sure the data's lined up.
The data's there, right?
Yeah.
It's only 1 day. I assume they'll fix it pretty quickly, but
still.
yeah.
So But so this one ran, so the group dashboard ran, we can see I've tried to match those criteria within the option screener as close as I could. The profit went up substantially, profit factors up as well. Win percentage didn't go up that much, but I look at this too and I see 157 rejected. So I'll come in there, I'll click on my run two, and then I'm just gonna quickly glance to see why I have so many rejected. You know, we did that particular delta range, which shouldn't be a problem because it's a 40-point delta range. But we can see some of these it's saying all the way back to 2007, it's not within that delta range. So what I'll need to do is I need to kind of go in there and spot check to say, okay, well, now you're telling me that some of these in 2017 wasn't within the delta range. So why is that the case? And then kind of, you know, just circumvent back around. But we can see that that really does, you know, obviously, you know, mess up the win percentage, mess up trades that could possibly be either winners or losers. So before I'm able to make a deeper analysis on that, the rest of this in my mind doesn't really mean that much until I can figure out, okay, how do I either get rid of these rejected or get them out of there? So, but yeah, so even trying to match them up based on the option screener, and you know, my win percentage is still only 43%. So, you know, that again just kind of solidifies, I think, you need to find the reasoning behind why you're going to buy the stock, what you're going to do with it, and then maybe use that list to come up with some stocks in the option screener. But still, you know, I want you to back test them, you know, have a fundamental, have a ground of why am I going to buy it? Why am I going to get in or get out of it? And then, you know, then that's where you want to kind of move from. So. Yeah, other than that, I mean, that's kind of all I had really. I just wanted to kind of run over those screens. I think we're going to get into, you know, more of the earnings stuff next week. I wanted to talk about those bullish pre-runners, but we can talk about them next week since we do have some time on them. But, you know, I think there's a lot of validity in most of those earnings trades that we have that we're sending out. I mean, I've used the majority of them. Some of them I haven't. But, you know, I think a lot of those trades are really good, and getting used to using that earnings calendar and that earnings plan is going to be pretty crucial. You know, but we're going to go over that next week. So I think, you know, I think everybody will find some good information out of that next week. A lot of it's going to be stuff we've been over in the past, but being able to use that plan and having those dates set ahead of time and being able to find those trades and kind of know which trades are the most optimal is going to be a huge help. And then again, just like anything, you can take that and then expand on it to match your own, you know, investment criteria. So,
Hey, Shawn.
Yes.
This is Winslow. I had a quick question, or maybe it's not so quick. On the, I love the pre-runners, and I'm going to do those again. And I was interested in the runners, and really, I was interested in what the proper or what a realistic entry time is. I'm not going to do the iron butterfly, but the earnings is going to be announced either after the market or before the market. Then the market is going to move, and then I'm going to be sitting there saying, "Oh, great! It hasn't moved to the whole expected move. I'm gonna buy a call." So the question is, when do you buy it? And do you pay attention to the expected move that you guys have, that Delphian produces? And then, I mean, I'm thinking, the other thing is you're still dealing with end of day data. So any runner stuff that you have is going to be at the, you know, it'll be a day late essentially. So is that, I mean, I'm sort of confused. And actually earlier today, you both said you haven't done those yet. So, so what do you think about the actual execution and entry of the runners?
Yeah, I think as it's tested, you know, within the system, you know, based on this screener, you're right. You're using the end of day data. So, you know, if earnings was, you know, let's just say this morning or last night, doing this bullish pre-runner, you would be looking to get into that trade, you know, as close to the close of today as you could, because that's essentially how this back test is performed, right? It would be either performed getting as close to the close tonight as you could,
Right.
or first thing on the open in the morning. But then you're kind of exposed to that overnight potential move. I don't know enough about testing it to state if it hasn't made that expected move, if it would be more optimal, to buy it if it hasn't made that expected move. But in my mind, that sounds like a fairly good assumption, right? If the expected move is $10 and it shows up as a bullish pre-runner and it's, a 90% win rate or whatever the case may be, and it doesn't make that full expected move, but it does go up. I mean, in theory, it sounds like it would probably be a good buy to buy it before it does keep making that move higher.
Yeah.
I just don't have any analysis to back it up,
My thought was, your iron butterflies, you make your 40 or 50% if the stock doesn't really go anywhere, or has to stay in the center of the expected move. If it goes close to one end or the other, you're sort of like kicking yourself, and I wish I hadn't done it, because you're not going to make a lot of money. So it's almost as if the real sweetheart iron butterflies, by 10 o'clock the next day, you're going to just get out at your 40%, and because it hasn't moved. And those are the runners over the next week or 2 weeks, probably will keep going. But I don't know. Okay.
Right.
I guess I will just watch.
Yeah, I think for the screener, I haven't used the bullish. I maybe have traded it a handful of times, not enough to give my great analysis on it. But I think it has validity behind it, right? You're talking about people that are bullish the stock. On average, it's going to have fairly good earnings of that particular stock, or at least it has in the past. And that bullishness is going to kind of continue for days after, because people want to kind of get into it. So yeah, I think in theory those trades are really good, especially when you can put that analysis behind it. I like to be able to use Delphian to say, hey, this is what it back tested and this is what it shows, versus trying to add some of my personal assumptions in there.
Right. I'll give it the full day's worth, I guess.
Yeah.
Hey, Winslow, I would look at, so if there's candidates that you like, I would go back in time and look, at what the earnings moves were. Okay, like there's one that's really good. And
yeah, I got five. I got five. Chipotle, ServiceNow, PH, Illinois Toolworks, Decker, and Deere.
Yeah, so go back in the calendar, and pull up the earnings dates on there, those markers and the charts, and just go back and look, and like, okay, it went up, and then it kept going up, went down, and it went back, and then it came back up, and
yeah, okay.
you can kind of get a sense of each, symbol and like how it performs. I would definitely do that.
Yeah, all right, thank you. I didn't think of that. The simple thing.
Yeah.
And
Well, it's only five. It's time intensive, and I think Ashok, we're trying to develop something where we're looking at, okay, here's the earnings move and like which ones revert and things like that. That'll be down the road at some point, but yeah, that's what I would look at for those. It'll give you confidence too. If it's like, 6 down and 4 up, and they all, kind of started creeping higher after, then that would give you pretty good confidence that, it's going to repeat like that. So yeah, Shawn's pulling up there. If you go up to the indicators, you can pull up, the earnings.
Hey,
Yeah.
And what I found, what I was going to show too is, and I think it's kind of useful, is you can, if you have a back test completed for not just the earnings for the past 10 quarters or 16 quarters, if you have it that goes further back, you can add your entry exit dates by clicking on this, clicking on the, let's just say it's for Illinois Toolworks, click on that Illinois Toolworks earnings, maybe like a bullish runner or however you were going to construct that trade, add that entry exit date to your screen, and then you can see specifically, how did Illinois Toolworks work, coming into earnings and after earnings. And this will give you an idea, like Josh said, if this was just for example, you could see, oh, well, hit this earnings that come out. It did go up a little bit, but it dropped down. Same thing here.
Well,
Went
why
up, but
don't
then-
you do ITW? Show me that. Let's take a look.
Yeah, let's see. So ITW.
That's one of them. This one, yeah, 90%.
Has anyone used that before where they do a back test, let's say on Illinois Toolworks, and then have come in here and applied that back test, that entry exit date to the chart? Has anybody done that? No.
I
No,
have.
Oh, but it looks like a good idea.
You haven't, Josh, or you have?
I have many.
Yeah. Yeah, I think it's a really cool because it shows you the open. It'll show you if I knew any of mine that were really small, I would apply it.
Yeah.
I don't
Well,
know
here,
if I-
just hey, before you jump there.
yeah,
like,
yeah.
So, like Winslow, if you look,
Oh, sorry.
you know, at this specific, I mean, it looks decent. You know, like
Yes, it does.
down,
Yeah.
move up. You know, this one was probably a loser. This one, obviously, you know, a couple. You know, this took a little bit, but then good. So.
Right, you're entering after the earnings date, actually
Yeah.
probably the next morning at 10 or something.
Yeah,
Right.
yeah.
Yeah, I see that. Okay, that's a good suggestion. I still like the pre-runners.
Yeah, yeah,
Well,
and ahead, Josh.
you got ball rise helping with the pre-runners, where this would, you know, you're probably going to be having some vol crush after, you know, a little, depending on the symbol. You know,
But this is in a sense safer because the earnings is out. So it's just look at the general trend or whatever, you know.
yeah,
Yeah. Okay, thank you.
sure.
Yeah, so it's a cool tool. I mean, you know, you can come in here and add a bunch of indicators on there and your entry exit dates on there as well. So I think, you know, there's a bunch of useful information that you can check out. But I think with our, and Josh can correct me if I'm wrong too on this one, but whenever the earnings plan is set up, you'll be able to see a stock maybe like Illinois Toolworks or some other stock that is a great bullish pre-runner candidate. And then it's also a great bullish runner candidate. So then you can see that you have a trend that continues like this.
DEC is the only one I found, DECK.
DECK on that sits on both.
Right,
Vector outdoors.
right.
Yep.
And of course, Google is the prime of everything.
Right.
But
For pre-run.
DEC did both. Was a nice one for both.
Yeah. So
Yeah,
if you can see this, go ahead.
That was Dave.
Yeah, go ahead, Dave.
I was going to comment to Winslow's kind of question on like when maybe to get into the, you know, you kind of want to get in when IB is lower, right? So depending upon when the earnings announcement is, whether it's, you know, Wednesday, Monday, Tuesday, Wednesday, Thursday, whatever, I find mostly the next week, it's always a lot lower, so cheaper. When it's not the week of earnings, it's into at least the next week.
Yeah, you sort of sell the news kind of thing.
Well, I'm just looking for when IB is going to be the lower part and figuring that'll be when the option will be cheaper to buy.
You're talking about the prior week, not the following.
No, I'm
week.
talking about after earnings.
Oh, okay. No,
you're
but
gonna-
you would buy the prior week, not the week of earnings, but the prior week. More volatility.
Well, I guess we're talking different strategies. I'm talking about after earnings. If it's going to run after earnings, then it probably runs the week more after the week of after earnings. You know,
Okay.
that's
Okay,
kind of what I'm saying. Not to
Okay.
get in before earnings, because then you have crush to deal with. I'm talking about after crush.
Yeah.
That's
Yeah, I got you a different strategy.
yeah. We kind of cross over a lot of times.
Yeah, I think this is nicer. It's certainly a little safer than the iron butterfly.
Yeah, no comment.
Yeah, maybe I'll tie my hands behind my back and I'll use my nose to do an iron butterfly.
Hey,
Right.
let me tell you that Chipotle just paper traded that because everybody said, oh, it was too high, too expensive for last quarter. But man, that would had a huge payoff.
Yeah, yeah.
It was really good.
Chipotle is a runner.
Yeah,
Actually,
I'm talking about the earnings slide.
Butterfly,
on that
yeah,
one anyway.
yeah.
So it was really big, and I just put it in the virtual portfolio and went, oh, should have traded it. So.
Okay, all right, this looks good. Thank you.
Yeah, no worries. Yeah. So does anyone have any other questions? I mean, like I said, that's kind of all that I had. We jumped around a bit, but I think just the moral of the story, if you will, is get in there, use the screener. I mean, I know a lot of people are using the state transitions and some different screens in there, but there's a lot of useful information in there. So just figure out the best way to attack it, use a progression, and then kind of move forward that way. And as always, feel free to contact me, reach out to me, reach out to Josh if you need any assistance with the platform. I'm learning stuff every day, and I don't mind showing that or helping everybody else with the platform as well. So, any other questions, anybody?
Ed, I saw Ashok popped on. I don't know if you want to say anything. Ashok, you there?
Yeah, I'm here, Josh.
Yeah.
I just wanted to say hi.
Okay. Shawn, I did want to show him real quick the matrix stuff. I kind of.
You want me to show them, or you want to show them?
I already set it up.
Oh, okay.
It'll take a second just to kind of give him a teaser, because next week we won't be able to to go through this because we'll be doing that earnings, but it'll probably be available after that. So when you click that matrix and you have a strategy in here, it'll pull up into a new screen, right? So it'll pull that specific strategy over here. So then you just have to go through and add in more strategies, and you see bull call just went in there, and then you can do bull put. So you can do whatever you want, and you can change them however you want. You can pull them back up. And then, so once you're happy with everything, and that's just based off of 2 right here, for the state transition. So once you have all you want in here, and it could be a big list, and you hit analysis, and then the system will give you a notification as soon as it's done. So you would click, so I already clicked on it. One's loud. Okay. So once that's completed, then it'll come up with results over here, and you have a drop down for each one, so you can just kind of click through them like that. So this is the basic format of how that's going to look. When we finish testing and releasing it, just so you guys don't get too confused. And I know Sudhir is excited to use it as soon as it's available. So just want to kind of give you a quick preview and like navigation instructions. It'll look a little different, but that's the gist of it. You guys have any questions on that?
Where will that show up? Only in that one area?
Well, when you hit well, right now, it's just shown in the matrix. We're not sure if we're going to have it as, every bulk's going to go into a single screen, or
Right.
we're going to have different.
When we roll out, then that won't be there. Metrics won't be there. It will be in the bulk itself. When you hit the bulk right now, you are getting the direct answer, right? So instead of that, you will be taken to this screen, and we are adding one more click, but we are giving you ability to add more strategies at the same time.
So the bulk will take you to a new screen.
That's correct.
Right.
And there you add as many strategies as you want. And when you are ready, you hit the analysis, and then it will take care of at the back end. Once the answer is ready, then it will send you the notification. You click on that, it will open the same screen again with what Josh had showed you.
Yeah, and you'll be able to test like the same strategy, and we haven't decided how to show that. You can click on them to see them, but you know, if you want to try all the different like profit targets, stop losses, put them all in one test, you know, for the same strategy, if you want, then you'll be able to do that also.
Would there be a way that if you like the particular strategy, to look at the back test results on it?
Well, you can always, like, once you go through, I would say the analysis like this, and you're like, okay, well, this is, this one right here is the best one, the striker that I like. I would just go back to to that individual if you want to look at it here. You know, so you did all the fast testing over here, and you come up with your best candidates. Then I would go back to this screen so that you can see, you know, like individual trades and things like that for the symbol that you wanted. This is just giving you that bulk analysis, not the detailed analysis like you get here.
Okay.
Yeah, so this is just like whittle things down. And then if you want to get, like Sudhir said, you know, go back and, you know, verify, you know, this one's matching properly. So you can go through and look at the actual, okay, what's my credit amount? What's my profits? You know, how long are these trades? How many are there? So you want to go back and just verify it for whichever ones that you choose, you know. Does that make sense?
Yes.
Yes.
Okay. Okay. Well, that's just a quick glimpse into that. I guess the last thing is, you know, we always try and talk about seasonality. Just wanted to see if people are implementing that. We had a ugly turn down. I just wanted to see how those have held up. Those that are, I know there's a lot of people tracking them in virtual portfolios. Just wanted to see if, you know, how those held up.
I did one on paper, and it in the recent downturn got stopped out. So I
Yeah.
haven't done more. In fact, I was looking yesterday on. I reversed the filter to look for seasonal downturns.
Yeah.
Because I figured if the market was going down and the stock normally goes down at this level, at this stage, a long put might be a good idea.
Right.
But I didn't really find anything in there to try. So, but yesterday the ones that were long call candidates were relatively low probability win rates. So I'm looking at it and trading it on paper mostly.
Right. Yeah. Always test it before you put money behind it. That's definitely a
What I did.
Hey Josh, it's Lee. I've been doing them, and I kind of misspoke last week. I'm actually in a number of them, and the ones that showed up yesterday, the PXD NSC, which is Norfolk Southern Pizza and Guild, they're all sitting in. They had good days.
Yeah.
Now, on my other ones, now I haven't closed any yet, but they were real positive. And those were bull puts. Those I'm sorry, they were bull calls. My other ones, I've got, I don't know, the bull puts. I probably have 6 or 7 of them sitting out there. None of them I've lost money on, and if the market will stay good, then I'll do well.
right.
I won't get rich off of them, but it's just little chunks.
Yeah. That add up.
Yeah, exactly.
Okay. Yeah. So, you know, we'll see how the market behaves. You know, like you guys have the key levels to look at, so just keep an eye on those. And Yeah, if there's, I guess, that's the only thing I wanted to show. So, if there's any general questions, we'll sit here and answer them all until you guys are satisfied, or, if there's none,
Right.
then go ahead.
I have a question, because I'm not a big options guy, but I was reading about the SoftBank thing, and they had a gamma, what was it called? A gamma, not streak, but a gamma squeeze. What the hell is a gamma squeeze? And it's like, apparently the IV is elevated, and they've been buying, this bank's been buying a ton of calls, I guess, and making all the market makers angry at them, so that when they get a chance to get back at them, I suppose they will. So what is a gamma squeeze?
Hello.
Hello? Jean?
Hold on a minute. Oh, I'm sorry. I meant to mute.
Oh, okay.
All right. So anyway,
We used to call it getting run over by the gamma train, so that's a whole nother thing.
What's that?
We used to call it getting run over by the gamma train.
So what does that mean
The
exactly?
stock takes off. Well, basically, if you're short an option, or you're, when these guys sell the calls, they need to buy futures, which drives futures or stock. Now that drives the price of the stock up. If the market's not super liquid, once it goes through your strike, you have to cover. So, I mean, you don't necessarily have to cover, but you're going to have to cover at some point if it stays above the strike.
Right.
And, so that leads all these guys that are, short the options to keep buying the stock, and it just goes up. We saw it in the futures a lot. It was basically like the tail wagging the dog, where they come in and buy so many options that you have to cover on futures, and the futures just go straight up. So it's
It's just a manipulation, huh?
so is that
to a certain extent.
will that affect earnings? These like pre-runners or stuff that we're doing?
I think it's just a short term. I mean, it's not sustainable because, the options obviously expire and things like that. But it sounds like it was, they're just, it's like cornering the market almost,
So maybe the IV is higher, or maybe the premium's a bit higher, but it's still, our techniques here will still work.
Yeah, well, I think that's over with for the most part.
I would agree with Josh. I think it's a short term, it can last a certain amount of days perhaps, or maybe a week, but I don't think it's not a long-term effect, I would say.
All right. Okay. Thanks. I guess I won't worry about it.
It's kind of a manipulation type thing. Yeah, you gotta have deep pockets to do that kind of stuff, So yeah, I haven't really heard of that before, but obviously Mark has some experience with it.
I saw this graph that the number of calls exceeded for stocks. It was like 350% of what it normally is. It's like all of a sudden it exploded. So someone was doing something in August. Yeah, when everyone's on vacation. Okay. All right,
now we know what happened.
Okay. Thank you.
Yep. Any other questions? Okay, well, we'll close it up for the week. Make sure you guys come to the webinar next week, and I'll send out the replay probably tomorrow morning for this that want to do that. So thank you.